Let's check in with Scott Gecas. He's with Walsh Trading, and he's at the edge of the trading floor there at the CME Group in Chicago. Scott, it's kind of a mundane Monday here. So, what are you hearing in the pits?
Yeah, today, I mean, in particular, going into tomorrow's supply and demand report, we expect volume to be a little bit light. So the option volume right now, you're seeing two-sided trade both ways, calls and puts, with the record levels of funds being short, especially in corn. Funds are short in just pretty much the grains across the board. There is a little slight skew to the upside calls, which means that the calls are going to be a little bit more expensive, just because if anything positive comes out, if it breaks outside of these estimated range of these numbers coming out tomorrow, you're going to see a big spike, a lot of short covering. It's going to move hard and it's going to move fast.
Scott, if I read between the lines of what you just mentioned there, it sounds like we're almost to the end of all of the shorts over here in this corn market.
Yeah, well, it's going to come out to see what's going to come out to with this number tomorrow, as well as we got to look a little bit further out and see where the planting is going to be, see if how much the wet flooding and all that has affected the crops, whether or not farmers are going to switch from corn to soy or not. So there's still a lot of things moving around here. There's a lot of, reason for the option volatility to be elevated.
Yeah, and you mentioned those options and the cost of those options a little bit. So could that mean that maybe the trade thinks that we've built in the biggest corn stocks number here now for a while, and that number could pull back a little bit? Or do you think that there's still room for this corn carryout number here to come in larger than what some were expecting, just because of the lack of feed demand and things like that?
Yeah, the lack of feed demand is definitely a deterrent when you're looking at current prices. So that's one of the reasons that you're seeing a bit of pressure. But with the report that came out a few weeks ago, the funds nailed it. They had it right on point. So that is still carrying over right now. But we're going to wait and see where this number comes out tomorrow and see what the future planting is actually going to be.
All right. And, of course, a lot of that's going to depend on the weather forecast. So we'll have to watch that very, very closely. We're going to be back in just a moment. We'll talk to Scott about all of what's going on in the livestock trade next year on the Market Day Report. Let's check in with Scott again and see what his thoughts are. Scott Gecas with Walsh Trading. Okay, your thoughts on this livestock trade. We did at one time have a lot of longs over here in the cattle market. We've pulled back just a little bit here. We had a little bit of a wide range of cash trade last week. So now what does the trade watch for? Is it watching what's going on in the hogs? Or is it watching the weather forecast of all of that weather that's going through the northern cattle producing belt, or what's next?
Yeah, definitely the weather is going to be the main focus. And for the first time in a long time, U.S. beef is being thrown in the mix with the Chinese trade war talks. So, with the hopes that China does become a massive buyer of U.S. beef as well as pork, we're going to yet to see. But on the technical side, with that big spike lower, we had a little bit of, short or some covering, and then we didn't break the tops. So what that tells me is we expect a little bit more downside pressure. So in the May contract, we're looking for that 120 level. If it breaks below it, we expect to be a little bit bearish.
Was this pullback in the hogs a surprise to the trade?
In the hog market, it's all over the place. So with the expectation of the whole African swine fever thing have an effect, there's just reports coming out saying we have to wait and see what's really the numbers coming out of China. If the numbers are as what is being rumored, we're going to run into a shortage of worldwide pork. You're going to see some producers start hoarding pork. You should see prices explode to the upside, but is yet to be seen. We have to wait and see. In the option volume, it's odd in the hog market in particular. In the May contract options, the puts are a little bit more active. In June, you're seeing rampant call options all the way up to 130, 140, 150.
Okay,
so
Scott,
we're going to see how that's going to play out.
Oh, okay. Thank you very much. I appreciate it. Scott Gecas, he is with Walsh Trading at the edge of the trading floor in Chicago.